The market remains at our will it or won't it spot. And we're going to take a look at stocks at new 52-week highs to maybe play what happens next. This is Koya Rosalum, and you're watching the Theo Nightly video for February 14th, 2019. And again, just picking up on where we were on Tuesday with our sector scan and sector strength, we have a market poised to trade down away from the 2750, 2760 level. That again is the 200-day simple moving average, volume divergence, and it is on the edge of the weekly expected move. We can zoom in and see that right here. In fact, we're closing today's session right on our weekly expected move. So again, odds favor a pullback down away from it. Will we get that pullback? We just don't know. That's of course probability. Better to play in the direction of the bearish pathway than the bullish one, at least in short-term trading activity. So we'll take a look at that thought process and carry it forth to a scan. Now these are the stocks in the S&P 500 that are making new 52-week highs. Believe it or not, the S&P itself just made a, not today, but yesterday, a new 2019 high. But there are stocks in the S&P that are making new highs not seen for the last year. And I've done the scan and segmented them by their industry. So take a look at which ones are popping out. We have 3 within retail, a few in healthcare, 1 in entertainment, 21st Century Fox, and the bulk of them are in equity real estate investment trusts. Those are REITs. And that's not necessarily an uber bullish thing for the market, just like we talked about in the video, where money is flowing into utilities and defensive sectors. Real estate investment trusts probably is not the thing you think of when you think of economic expansion and places to put money in the equity market. You probably think about retail and financials, not here. So that's a little bit more defensive, but here they are. And these may be names you haven't heard of, which to an extent is the point in the S&P 500. The purpose of this video is to broaden our perspective to stocks that we might not see, and that's what a scan tool can do. It's fun to trade Apple, Amazon, and all the others, but sometimes we get opportunities in lesser known stocks that are breaking out, making a trend movement, or fading against some key level. So we'll keep these in mind as we take a look at just some of the charts, probably that you've heard of, and some that maybe you have not. But any type of strategy that goes with respect to a market into a resistance point, or breaking, as in today's video, breaking to new 52-week highs, the thought process is that is showing relative strength. And that trend or supply-demand imbalance should continue. Therefore, our strategy should be to trade in the direction of the trend and to play calls potentially, in out spreads, maybe sell some put premium, or do any other strategy that helps us buy on pullbacks in these trending markets. Now, we'll take a look at our first candidate. We'll look at Kinder Morgan. Symbol KMI is an oil and gas consumable, and it again is making our new 52-week high. That's all that the scan is doing. Is the stock today making a new 52-week high? We can look at our weekly chart to cross-reference it, and it doesn't look really bullish. That's what we look at these for broader perspectives. The scans help us, and they show us what we want to see, but the bigger picture shows that KMI probably is a little bit more bearish than we otherwise would think, as opposed to if this was, let's say, over here, making and exceeding new 52-week highs in a persistent uptrend. And that's just not the case for KMI. Nonetheless, it is pushing up away from support, trading up maybe towards 20 per share, 21, 22, so those remain upside targets. But again, if we just look at one perspective, we might be very bullish on the stock. Remember, the S&P itself has rallied off the low, and it's roughly in this spot. Kinder Morgan, being a stock in the S&P 500, is stronger. So we want to identify those stocks that are strong with this strategy and then expect them to get stronger. Therefore, the trade strategy is to buy on the pullbacks. One of them occurred here in mid-January. The other occurred into February. And at this point, there's no trade on the stock unless you want to play the aggressive fade. And that would be puts or otherwise selling shares short for a rapid pullback toward our moving averages. That's the other way, if you do want to play these names, is to play a short-term fade position. That is to short highs and expect a rapid pullback. So either way you want to play it, these stocks give you a landscape to do that. Fade strategies or buy pullbacks in the future strategies. Another one you may have heard of is waste management. One you probably don't trade a lot. It is a commercial services and supply, a WM. So again, stocks that break to new highs tend to have greater odds to keep going. The key point here is the 100 per share round number pivot. What's most likely to happen here? That's a creeping uptrend for WM. So maybe shorting a very, very short-term intraday or maybe a tiny swing trade down to 98, but otherwise looking to play pullbacks to your 20 exponential. That's going to be the broader strategy or the better strategy until we get a break under our 20-day moving average. Here's something you've heard of and maybe traded. Starbucks. We had an earnings play in it in a prior video, and that has exceeded the 52-week high that did break through the expected move for earnings, right? The pullback and the breakout and the continue, the swing higher. That's what we're looking for. A stock that breaks to new highs tends to go even higher, and we want to be buyers of the pullbacks. And if you're uber aggressive, short sellers of the highs. But see how that doesn't really result in much movement? A few days down, sure, those are probably better done for intraday trades. So Starbucks continues to trade higher. Other stocks might include O'Reilly, and that's a good one. That's a retail, it's kind of a specialty automotive retail, and AutoZone will show up here as well. So similarly, O'Reilly has broken its prior high, 360 per share, and gone higher. You probably would want to trade option strategies on O'Reilly given the share price. Probably not trading swing strategies with just the open shares here. And the principle is the same. The breakout leads to continuity, breakout leads to continuity, volume coming in, and we have candidates to buy pullbacks. And the other one, just to take a quick look at it, is AutoZone, right there with O'Reilly. And that is a similar gap and go, buy the pullback on a swing basis, or, if you will, once we're down at prior lows, sell some put premium down here. AutoZone is like O'Reilly. You probably don't want to trade this on a share position. Probably some type of vertical spread or maybe even an in-out spread. Cisco, I know we've traded Cisco before, but it as well is making not really an impressive one. And in fact, the earnings pushed it to a new 52-week high, but that one's probably a fade candidate. And that is the other way to use stocks like this. But scans are helpful, in summary, just to give us ideas, candidates, stocks, opportunities that we aren't going to see if we just trade our normal names. They're catalyst stocks, and this is stocks that are pushing up. Supply-demand imbalance has taken it to new 52-week highs, and either we continue or we pull back and fade. So for your trading opportunities, depending on your style, strategy, and time frame, probably still use options in these candidates. But otherwise, watch these names, others that are included, for example, Fox, and the others you might not have known of, and do your own research, and of course, manage your risk and open positions. This is Corey Rosenblum with our Theo Nightly video for February 14th, 2019.